All right. So moved down to the trend, tested it, bounced, failed the bounce on Friday's close, and started continuing back to the downside into the end of the day. Slightly above the market maker's expected move. Options stayed overpriced throughout most of the session. I still think this kind of maybe bleeds out, but we are getting stronger support at 5,700 right now, or 5733.50 here out on ES. This is our third test of the support now. Possibly another one here in the overnight session since this looks moderately weak. However, given all the political things going on right now, that could change really quickly. Some of my charts might be kind of down today, so I gotta fix them. Commodities up a little bit, mostly on the back of the 3% surge in oil, but copper and silver both moving up. Gold moving down a little bit with the falling dollar. Dollar ending the day at 103.90, so a bit higher than it was earlier, but still quite low. Most of that lost against the euro and the pound. Some of this pricing in the slightly better poll numbers for Kamala over Trump, which people think is going to lead to a weaker dollar. Yields at the top end of the curve falling pretty sharply. But the 3-month and the 6-month, which had not so great auctions today, 3-month rose just ever so slightly. So a little bit less short-term expectations for a Fed cut. Core 1 month still kind of breaking down. Broke out this morning, but then kind of recovered. Definitely still seeing a breakdown in correlation though over the last few days. USD JPY leverage fell a bit from around 8.2x down to about 7.9 right now. Move up, and the move up is alongside a move in correlation. So we're starting to see core 3-month and bond volatility track hand in hand a little bit. Skew, not doing much. 33.79% of the S&P over its 20-day moving average. I don't have the correlation thing up for that. Fed fund future is now pricing in 0.58 cuts as of today for June of 2025. This is about where we were last Friday, maybe a little bit higher, but roughly 2 cuts by the middle of next year. And the spread between the 2 and the 10-year narrowed a little bit, but not a lot. On the technical side of things, that should be a retest of the 200 MA. We kind of poked a little bit through it earlier today, and we may now fail into tomorrow. A failure at the EMA 50 or the MA 50 probably going to lead to that test of 56.69 that we've been looking out for in the higher time frames. That would be confirmation of a reversal from our high, and increase the likelihood of more downside and a continuation possibly to around 54.46 or 53.90, which would be our next downside targets. Below that, we start running into the 200 MA. Failure of that, we're looking at a more extended continuation of the downside move. So, yep, we'll see what happens tomorrow, but we're very close to slipping that 200 or 50-day moving average, which is, important for systematic funds at least. Yeah, no problem. Thank you guys so much for tuning in. I will see you all tomorrow morning. Have a great night, guys. Later.